Hey there, welcome back to my channel, it's me, the Mind Injector. In this video we'll be discussing China-based electric vehicle manufacturer NIO and their plans for expansion. But before we dive into that, let's take a closer look at NIO's current position in the market. NIO has been working hard to establish itself as a leader in the EV industry, both in China and internationally. However, their expansion plans have raised some concerns among investors. While the company has already made strides in the industry, their venture into battery swapping technology and other fields will require significant time and capital investments. As a result, the company's investors should prepare for potential share price volatility and growing pains this year. Remember, NIO's track record isn't perfect when it comes to expanding into different fields. They have had issues with regulatory problems, and their attempt to commercialize the smartphone called the NIO phone seems to be going nowhere fast. Perhaps it would be wise for NIO to focus on what they've already poured a great deal of capital and man-hours into, which is producing EVs that will resonate with the public. Nevertheless, NIO is aggressively venturing into a relatively new and untested market, the battery swapping stations. They have set a goal of establishing 2,300 battery swapping stations by the end of this year, which will undoubtedly be a capital and labor-intensive operation. However, this might not be the best move for NIO, as they sustain a $838.9 million net earnings loss during 2022's fourth quarter. NIO has also entered into a 5-year partnership with Wencan Group, a supplier of one-piece die-casting parts, and disclosed a collaboration with energy technology company Tibber, which provides an energy usage tracking app. While NIO's management may believe that more is the same as better, that's not always the case. Many large, successful companies are reducing their operation and expenditures this year. So, what does all of this mean for NIO's investors? It's important to remember that expansion plans can be hit or miss, and it's probably better to adopt a wait-and-see policy instead of jumping headfirst into a trade. As a cautious investor, you can choose to monitor the situation and revisit NIO stock at a later date. In conclusion, NIO's management has a serious choice to make. They can continue to test out new ventures and collaborations, but the results will be uncertain. Alternatively, they can focus less on expansion plans and instead stick to NIO's core business of manufacturing EVs in a super competitive market. Frankly, the company's deep dive into battery swapping stations might not boost NIO's stock. Therefore, it's wise to stay on the sidelines and watch NIO's progress, or lack thereof, from a safe distance. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.